So you want to trade Forex, but you're probably thinking it's all just guesswork, right? Like gambling. Well, we're going to show you how to turn it into a real craft, built on a solid, repeatable blueprint that you can use again and again.
I mean, does this look familiar? Just glued to the screen, eyes burning, terrified you're going to miss the next tiny little move? So many traders burn out this way. You feel less like a strategist and more like, well, a professional button pusher. But what if I told you there's another way, a way to step back, take a breath, and make bigger picture, more calculated decisions? That's what swing trading is all about. It's the calmer, more structured answer to all that chaos. So let's get into it.
Okay, first things first. Every good blueprint needs a rock-solid foundation. Before we go any further, let's get super clear on what we're even talking about. What exactly is swing trading?
At its heart, swing trading is really about one thing: patience. We're not trying to scalp tiny little profits here and there. Nope. The whole game is about identifying one big, significant price move, what we call a swing, and then holding on for a few days, maybe even a couple of weeks, to let that idea really play out.
And you can see this requires a completely different mindset from day trading. You're holding trades overnight, which means you have to be comfortable with that. Your decisions are slower, they're more strategic. You're looking at the big market structures, not just the noise on a 5-minute chart.
All right, foundation is poured. Now we need to get our bearings. Think of it like this. You'd never try to navigate a city by just looking at the street right in front of you. You'd pull up a satellite map first, right? That's what we need to do here. See the whole landscape before we zoom in.
And this right here is how the pros do it. It's called the top-down stack. You always start with the weekly chart. That tells you the big, long-term story. Then you zoom into the daily chart to see the current chapter. Are we in a strong trend, or are we just stuck going sideways? And only then, once you have all that context, do you drop down to the 4-hour chart to actually find your trade. Now, if you only remember one thing from this section, please make it this. You have to trade with the higher time frame bias. You want to be swimming with the current, not fighting against it. This single rule will filter out so many bad trades. It's an absolute game changer. So what does that bias actually look like? Well, markets are pretty much always doing one of two things. They're either trending or they're rotating in a range. If it's trending, your job is simple. Buy the dips in an uptrend or sell the rips in a downtrend. If it's stuck in a range, your strategy completely flips. Now you're looking to fade the extremes. Sell near the top and buy near the bottom. Knowing which game you're playing is half the battle.
Okay, we know how to read the map. We can see the bigger picture. Now we need a playbook, the actual specific plays we're going to run. This isn't about learning 1,000 different patterns. It's about mastering a few really powerful ones.
And really, we can boil almost every great swing trade down to one of these 3 fundamental setups. You've got the trend pullback, the break and retest, and the range fade. That's it. These 3 are the absolute backbone of a professional swing trader's playbook.
Let's talk about the first one, the trend pullback, because this is your bread and butter. It's simple. The market is in a clear, strong trend. You don't chase it. You wait. You patiently wait for the price to pull back to a logical area of value, and then you enter as it starts to resume its original direction. That's the core play.
All right, I need you to listen very closely, because this is, without a doubt, the most important part of the entire blueprint. You can have the best strategy in the world, but if you ignore this, you will fail. I guarantee it. We have to talk about risk. Just burn this number into your brain. 1%. On any single trade, a pro is not risking more than 1%, maybe 1.5% of their entire account. This isn't a friendly suggestion. It's a hard and fast rule that keeps you in the game long enough to win. Okay, I can hear you now. 1%. Got it. But what does that actually mean when you're staring at your screen, about to click the buy or sell button? How do you turn that little percentage into an actual trade size?
Don't worry, the math here is actually super simple. First, you figure out your account risk in dollars. So if you have a $10,000 account, 1% is $100. Easy. Next, you look at your specific trade and figure out the risk there. That's just your stop-loss distance in pips times whatever a pip is worth. Then you just divide the first number by the second, and boom, that's your exact position size. You do this every single time.
And hey, risk isn't just about one trade. You also got to manage your total portfolio risk. The sum of all your open trades, it shouldn't be more than, say, 4%. And what happens when a big news event is coming, like a central bank announcement? You either cut your size in half, or even better, you just stand aside. Protect your capital. So, we've got all the pieces. We have the foundation, the map, the playbook, and the all-important safety rules. Now, let's put it all together. This is the assembly line, your day-to-day process that makes this whole thing a consistent, repeatable workflow.
Before you even think about putting on a trade, you run through this checklist every time. Is my bias confirmed on the higher time frames? Check. Do I see one of my core setups playing out right now? Check. Do I know exactly where I'll get out if I'm wrong? Check. Have I calculated the correct position size for my 1% risk? Check. If you can't check every box, you don't take the trade. It is that simple.
Okay, let's make this super real. Here's how it all looks on an actual trade in the Euro-USD. The context? Clear daily uptrend. The setup? A beautiful pullback to retest a support level. The stop loss is clearly defined below the low, a 75 pip risk. The target? The next major high. You see, all the pieces of the blueprint are right here, in one clean, simple plan.
And this might be the biggest mindset shift you ever have to make. Your success as a trader has nothing to do with whether a single trade wins or loses. Nothing. Success is judged by how well you followed your process. Did you stick to the blueprint? If the answer is yes, then you had a good day, no matter the outcome. That's how professionals think.
And it all kind of boils down to this. Your edge in the market doesn't come from being the smartest or the fastest. It comes from patience. It comes from having the discipline to wait for the A-plus setups to come to you. This is a game won by taking fewer, but better, trades.
So there you have it, the complete blueprint, from the foundation all the way to execution. We've laid out the entire framework, the entire process. The blueprint is in your hands now. The only question left is, what will you build with it?